So I have a question on setting up job costs that hopefully helps others watching. All right, no doubt it will. What are some thoughts you have on how people in construction should set it up? When I set this up for clients, I'm always concerned with setting up too many products or services or items versus not enough. Any thoughts on what the right balance should be? Yes. This is a powerful question. I'm glad you asked. I go back to materiality. And here's what I mean by that. I don't mean it necessarily in the auditing sense of the word where there's a number, but I do mean it in the sense of the word that it's the difference between what makes a difference and what really doesn't make much of a difference at all. So for example, if you don't want to set up products or services or items for full, not only job costing, but item costing, I bring that up because you mentioned item, product, services, and items. There are two things in play here. There's the job costing, which I define as tag everything with the customer name and the income and the expenses, and then you can run job costing reports, which to me says more like profitability by customer. And then you have item-based reports or reports based on products or services, and make sure to tag all income and expenses with those products and services, so then you can run profitability reports based on item. And if you have both of these going on, you can run a more detailed report based on products, services, or items for a given customer or a given group of customers. So I wanted to distinguish those dimensions of things that we're measuring, so you know that you can measure this, or you can measure both of them together. And I am a strong proponent of don't bother engaging in any activity unless it's going to be useful. And there are two major types of uses for financial information: external and internal. So if you need it for the IRS, for example, have at it, right? Do whatever it takes to get the information that you need. Job costing, and in this case, Richie is clarifying about items. So item profitability, for example, or item trends, those are important for internal reporting purposes. So someone can make a decision based on that information. So if in the accounting system, you're using a feature that requires an item, but that item, no one is making a decision based on that item. No one's counting the inventory and comparing it to the books. Maybe it's not even an inventory item. Or maybe it's just like paper clips, individual paper clips, not cases of or pallets of paper clips. Individual paper clips. Nobody's going to be counting those. If it doesn't matter, then it doesn't require an item, or if it has to have one because of your data entry system, then you can combine it with others. You can create an item called other items. Those things can be combined or aggregated if no one is using that information to make a decision. So that's the philosophical underpinning behind that answer. How I strike that balance, who's using that information. In general, I err on the side of creating items, and when the items are created in a way that is easy and intuitive, I prefer the greater level of detail, because it's always easy to aggregate and look at a report and sort, for example, and look at the highest profit or highest revenue or highest cost items first and ignore the rest of the report. Or you can always aggregate and create an item called other, and then group all the ones that are less important under that one. So when you're looking at an overall report, you can group all the other ones into a collapsed report and just have those in a single line item. And then have the ones that are material for decision making out there front and center.